somebody even posted in one of the videos, I learned more in one of your videos than I did on a paid course. And the reason I share the content openly is because this is no longer a world about lack of information. We're no longer in the information age, we're information overload age. There's plenty of information out there. So, if you can add good value to people and help people, what you're doing, you're building that trust. You're allowing people to get to know, like, and trust you before they even ever meet you.
Hey, what is good, YouTube? Thank you very much for tuning in. My name's Gov, and welcome to another episode of the Property Newbie podcast. On this week's show, I had the pleasure of sitting down with Saj Hussain, aka the joint venture and raising finance expert, and we went through all the details of how to raise investor finance, how to qualify investors, as well as a ton of other topics, especially for newbies that are just starting out. So make sure you grab your pen and paper because this podcast is full of absolute gold. As always, if you enjoyed the video, please be sure to like, please be sure to subscribe and turn on those bell notifications for more videos like this. But until then, sit back, relax, and take note of the absolute golden nuggets that you're going to hear today. Enjoy. Right, so we're live in 3, 2, 1. Saj, welcome to the show.
Thank you so much.
I'm not going to lie, guys. I'm a little bit starstruck. I remember watching your videos about probably when I started back in January, and to have you sat in front of me, I can't even contain this smile. So you're going to see a lot of smiling here today.
Oh, God, be too kind. I'll pay you later.
Yeah, that was paid. Saj, thank you for coming down. Like I said, thank you for taking the time out. I know you're an incredibly busy guy, so to take a bit of time out to do a podcast to help the next generation of newbies that are coming through absolutely means the world. So just to let you know how this is going to go, I've had a ton of questions come through, as you can see by this full pad of A4. And I'm just going to ask you 1 or 2 questions, and then I'm going to jump straight into the questions from some of these newbies just to pick your brain, and we'll get started. So, as I start most podcasts, how did this property journey begin? How did you get into property? Where did it all start? What was the point where you thought, right, property is the life for me?
Actually, that's an interesting question. Property started for me. It's nearly 15 years since I've been in property. My father was trying to beat me into getting into property when I was a little kid. It's in the Asian blood. You have to buy property, and I resisted for a very long time. And I just couldn't see the sense of parking a huge chunk of cash into a property and get 150 quid a month profit, because that's all I knew or understand about property at the time. And I really didn't want to go there. And I think the shift really happened. I was at a point in my life around 15 years ago where I really needed to change what I was doing. I was at a very low point. I needed to find a new way, not just for myself, but it was really for my family to have a comfortable future and create something that would be generational beyond me rather than just me. And that's what got me thinking about property at that point. My father just passed away at that point. He passed away about 15 years ago. And I thought maybe there was some wisdom in his words. I need to think about it. And actually, I'd been a fan of the Sunday Times Rich List a long time, from issue 1, a long time ago. And when you go through that list, this is the wealthiest people in the UK. So many of them either make money from property or keep money in property. And that's really when the penny dropped for me. And I thought, there's got to be something in this. But prior to that, my belief always was you need a huge amount of cash to make money from property. And I was always in business. I never really wanted to work for anybody else. So for me, money was a tool to trade. And I thought if I park in property, it's going to be stuck. But when I was starting property, I didn't have any money to start with anyway. I was at that point. So that's really what got me interested and curious about property.
No, I love that. And actually, you sort of touched on a video which I actually saw where you actually went through the rich list and you were talking about how many billionaires there were. I think it's something like 145 billionaires, which is just staggering. But one thing that you pointed out, which obviously you're sort of an example of, is there's a lot of money to be made in property, and a lot of these guys actually made a lot of money in property as well. But what was the point? Was there a certain situation? Was there a sort of like a story? What made you think, hang on a second, actually my dad was right, there is money to be made in property? What was that first turning point for yourself? What was that first deal, or what was that first little bit of interest that thought, actually I could probably do this for a long amount of time?
I think at that time, the strategy that used to be followed the most was no money down.
Yeah.
It literally was a case of you'd buy a house and on the same day you'd remortgage it and get a chunk of cash out and maybe even more. So you'd start off with more money at the end of the day than you started with, and you own a property. It was just crazy, but that's how the market was. And I'd heard about all this stuff because I started learning a little bit about property, and social media was just not what it is now. At that time, 15 years ago, it was there was a little bit online. There was a few live events, some books and stuff, and that's where I was trying to scrape and learn this information from, and a few forums. And I'd go along to low-cost networking events and just try and pick up stuff. And sometimes, you know, you'll meet people at these events where they'll give you a little sprinkle of this is what's possible, and you're kind of gobsmacked of how they've done it. Oh, bought all these properties using no money down strategies. And I'm thinking, how do they do that? Oh, you've got to come on my course to learn. I think, well, I haven't got 2 pennies for a together. I'm going to go on your course. So I was kind of struggling with that for a while, and I remember it's probably about 2 years. I tried lots and lots of different things in property. You know, I'd go along to an event and I'd see somebody talking about, you know, HMOs is a strategy. You can make £1,000 on a house. And I'm thinking, well, that's the thing I need to be doing. You know, a couple of months later, you hear somebody else talk about, you can buy a house for £1. And I think, well, maybe that's what I need to be doing. I've got £1. I could do that. And then afterwards, somebody's talking about no money down. And then you think, forget the pound. I'm good. I'm doing no money down. And what it actually led to is just jumping around between lots of different strategies. That was probably the biggest mistake I made when I started. I was trying to do all the strategies at the same time, and all of them badly. But what actually did work quite well during that time, I built up a huge amount of knowledge because I was learning all this stuff, just not getting any results. And that's really what the challenge was at the time for me. So the first property that I managed to get no money down, that was the first deal we did. It was in Stoke-on-Trent, actually. I remember my wife at the point had pretty much given up. She's thinking I'd kind of gone crazy, joined some cult or something. I'd come back bouncing off the walls after networking. We're going to be doing this and we're going to do that. We're going to be rich, and I've got a solution to all our problems. We can buy houses for £1. I've got a tenner. We're going to buy 10 houses. And she's supportive. We've been married nearly 30 years. She's supportive. But at the same time, I could see she thought this isn't going anywhere. You know, I've lost the plot, because it was a good couple of years before I got the first deal done and made any real money. And that house, we got it structured. It's quite a long story, but the shortcut of it is we found the property, got it structured, no money down, just whilst you still could just about do those type of deals. And I got about £4,000 cash back on the day. And when it was 3,900 something, when that landed in the bank account, then my wife was converted. We could do this. Before that, she thought, this is just crazy. Why is anybody going to sell you their house for less than it's worth?
See, you
believe it.
You said a couple of things there that kind of hit home a little bit. For example, I think, and this is not the whole generation of property investors that are coming through, the new wave that are coming through, almost expect results almost instantly within the first week, within the first month, within the first 6 months. But you said something there that you didn't actually get your first deal till a couple of years later. And even then, it wasn't like you made £1 million on your first deal. It was just that belief of, okay, I've made £4,000. This is 100% possible. I've learned a little bit. I've put that knowledge into play. There's a question that's actually come through. You actually answered one of them already, but there's a question that come through which is quite interesting, because you mentioned it there about networking, especially in your early days when you were just starting out. You went to a lot of networking events, probably met a lot of people as well. I've had a question that's come in from Aya, so thank you, Aya. She said, if someone was quite sort of shy or introvert, what advice could you give them, especially when it comes to their first couple of networking events, to really put themselves out there and sort of go 2 feet into sort of like the property industry or the community, if you like?
It's a great question because it's about getting outside your comfort zone.
Exactly.
So the short answer could be you just got to get over yourself, but that's probably not very practical, not very helpful either. So it's a case of how do you do that? Well, what I would suggest is maybe going along with a couple of friends rather than being completely on your own. So you feel in a slightly more comfortable environment rather than the way outside your comfort zone. And it's when you're talking to people and networking, what I found, especially at the beginning, because I hadn't done any networking before that. I was quite social, happy to chat to people, but I didn't really kind of understand what I was doing. I was just learning about property. Why am I here? I'm just learning about property. And it's only when I look back I can tell who were the smart networkers and who were just, let's just leave it there. And the smart ones would take time to understand people. They'd talk to you. They'd be focused on you. looking at you straight into your eyes. Tell me why you're here. What is it looking to achieve? What would help you right now? You know, one of my favorite questions, what's one thing that make a big difference for you right now? Yeah. You know, they ask meaningful questions that really make you think and stop and think, well, actually, this is what I'm doing, this is what would help. And then they try and connect you and, you know, say, maybe talk to this person or do this, or have you thought about doing this? So really adding some value without any expectation of anything back. And that was a huge learning for me. Yeah. So when we talk about networking, it's not as though you've got to go and talk to 100 people. If you had 3 meaningful conversations in one evening, that's a good network evening. Yeah. I think what I found really doesn't work, I've seen people do this, and bear in mind, a lot of these things I've done myself to figure out they don't work, rather than I'm saying I'm more perfect, far from it, is when you turn up with 100 business cards, just chucking them away like they're confetti. Have my card, just shove them up people. What happens to those cards? They just go straight in the bin. Yeah. Nobody even looks at them. And so now I don't have any business cards. The reason I don't have any business cards is because I want to take the contact number of the person I've spoken to, and I want to be in control of that conversation. I want to follow up with them. Yeah. Rather than leaving it to somebody else. Hey, give me a call. Call my people and they'll talk to your people and we'll arrange something. It's just nonsense. Nothing comes from that.
I love that. You touched on something there, actually, and it was a video that I remember sort of vividly watching about a year ago. And the title was quite blunt. It was like, why most newbies fail in business. And I came across it on YouTube. I was like, I have to watch this. I love Saj anyway, so I need to watch this, see what he says.
Oh, it's one of mine.
Yeah, it was one of your... Yeah, I've saved that in my favourites. And you spoke about in that instance where you didn't necessarily... The reason a lot of people will struggle, especially early on, is they actually spend a lot of time doing those things, such as, I need to make sure the website's right, the business card is sort of perfect. When you were starting out, how quickly did you realize that, well, actually, not a lot of this is going to actually make me any money. I just need to get into the nitty gritty and start making some actual money?
To be honest, it was really a slow transition. And I've been a big fan of Brian Tracy for a long time, and he talks about tinkering around the edges. You know, you get to the office, right, I'm going to start work. Well, I've got to line up my business cards. I've got to check my social media and stuff. And I've got to make sure my files are in order. And what you do everything other than what you're supposed to be doing. Yeah. Anything other than what's going to lead to business. And we do it upside down. We need to focus on the thing that's going to make the biggest difference. And I tinkered around the edges for ages. Or I need to have a great website. I need to get a great logo. I need to get this right. And a lot of those things aren't relevant, aren't important. You see some many successful people that haven't got a website. Yeah, it isn't about the website, the brand. It's about building relationships. And you don't need business cards or thousands of Instagram followers for that. You just need to talk to people.
Absolutely. I couldn't agree with you more. You know how you said, by the way, if anyone hasn't, your networking events are just absolutely amazing. I started going to them last year. Obviously, we've got Khalid in the back as well, who helps arrange them. Absolutely amazing. Probably the best one in the West Midlands. And you're right. in the UK. And one thing, as you mentioned, it's not necessarily going up to someone, even like selling yourself. It's just building relationships, small connections that you can walk away and potentially JV with, potentially, I don't know, source for, work with, which actually brings me nicely onto some of these questions, if you don't mind. I'm just going to jump straight into these newbie questions because they're absolutely amazing. You're going to recognize these names as well because they literally troll you. As soon as you're on a live, they're like 101 questions because we've got a lot of love for you. So the first question is actually a guy that you did a little sort of interview with, Kabir. Yeah. So just as we're on that point of sort of JVing, what qualities and characteristics do you look for when you're JVing with someone? Because obviously you're sort of renowned for being the JV sort of king, if you like.
Yes. So I think another realization that took some time was that people do business with people they know, like, and trust. Yeah. And what we have to do is become investable by allowing people to get to know, like, and trust us. And this is where I think social media has played a useful part, and especially sharing content. Someone said to me recently, why do you share good stuff? In fact, somebody even posted in one of the videos, I learned more in one of your videos than I did on a paid course. And the reason I share the content openly is because this is no longer a world about lack of information. We're no longer in the information age. We're information overload age. Yeah. There's plenty of information out there. So, if you can add good value to people and help people, what you're doing, you're building that trust. You're allowing people to get to know, like, and trust you before they even ever meet you. Yeah. And that's why I think social media is so powerful. But let's just park that to the side for a moment. Let's say, people, you haven't got a social media presence. People don't know you as such, and you're at a networking event and why would somebody invest in you? So you have to think about and answering that question for yourself. How can I be investable? And if the shoe was on the other foot and you were the person approaching yourself, as it were, to say, I'm looking for investment, and it was your hard-earned money, would you invest?
Yeah.
And why would you invest? And this is what also helped me understand that personalities are different. Not everybody's the same. Some people will take their time to make decisions. They'll reflect on it. They're very slow decision makers, very analytical. Other people, big picture people, they'll make a decision in an instance. Do you see? Because it's for them, they base their the decision on emotion. So how do they feel about you? They get a good feeling about you. Great, let's do this.
Yeah.
And somebody else might be, yes, I can see that you're, we've met here a few times, but their decisions are going to come from logic. They need to revert back to the spreadsheet. Yeah. What's the spreadsheet say? What does the partner say? Do you see? Consult with a neighbor, whatever it might be. And these are just two extremes I'm trying to give, and there's personality traits in between as well. So when we're talking to people and we're trying to raise money, and when we're kind of unknown, we have to remember that not everybody's the same, and we have to adjust how we're speaking to people during that conversation. Yeah. And if you have one style, that's going to probably exclude 75%.
Very true.
So you have to adjust how you're communicating with people at networking events. This is a little bit more advanced, but this is all learnable. You start adjusting how you're working, and that could be the pace, the tone of how you're speaking to somebody, just to help build that rapport so much more quicker. Because remember, you have to allow the person to get to know, like, and trust you before you ever going to get to the point where they're ready to invest with you. Yeah. So what can you do to allow that to happen? Because if you think about it, when's the last time you parted with money and bought something from somebody you didn't like and you didn't trust? Yeah. We don't do it. Whether it's buying a used car, a new fridge, or whatever it might be, we just don't do it. If somebody turns up, the sales guy comes running up to you, hey, I see you looking at this car. And he goes, no, I'm fine, I'm just browsing. Because that initial 2-second reaction that you got didn't give you a good feeling.
Yeah, no, I love that. And you touched on an important point there, where we're in a world which is dominated by social media. So to actually get your face out there, to allow people to get to know you, you can almost do it in the comfort of your own home. And you've become a big advocate of that. Obviously, I spoke about your YouTube channel, LinkedIn, your sort of your Facebook as well. I mean, you jumped on a Facebook Live for our Property Newbie community, which I think it got over about 45 people tuning in live, which was just absolutely phenomenal. You kind of briefly touched on it there, but I just wanted to pick your brain sort of at a deeper level. I've got a question from Ethan and Lilia, and you sort of just brushed on it there. So they've said, as a newbie with literally no previous work experience, no previous project, but they're interested in raising finance, how would they build that sort of like trust with someone? How could they help get themselves out there? And how could they get people to sort of trust them enough to sort of part with their money? And allow them to work on these projects that they want to. Okay,
so with regards to raising money when you're brand new and you have no experience whatsoever, yes, you can go around, get to know people, start building that trust. But ultimately, when it comes to parting with cash, you have to think about how is the other person going to feel about that. So often it's not about the return that they're going to get, it's about getting the return of the money that they're initially investing. Because let's face it, we all hear lots of horror stories of people that be invested with somebody and that money's disappeared. They're not going to see that money again. So it doesn't matter whether it was 3%, 5%, 25%. If you don't ever see your capital again, then it doesn't matter what the return was going to be. So it's what can you do to reassure that person what they want. So sometimes this is also about questioning. So let's say you're at that point where you're speaking to somebody, you're having a conversation, you say, look, we're quite new to this, we haven't done this before. And straight away, what does that do? That puts the fear in somebody's mind. If you don't know what you're doing, I might risk losing money here. So how do you deal with that? Well, first of all, you have to align yourself with somebody that's going to help you. So you might say, although we're brand new, we have such and such and such and such we work with and helps us. It doesn't mean that they're business partners. It might be that we just tap into them for guidance or support or mentor or whatever it might be. What you're doing is now you're borrowing and leaning on their credibility that, look, although we might be new, we do have some support here that we can tap into and some guidance. That's the first thing I think that's really important. And then and we talked about different personalities earlier, then it's asking the question about, look, if we were ever to work together, what would be the most important thing for you if we were going to work together? Do you see?
You're flipping it back.
You're getting straight to the heart of what is it that they're going to base their decision on.
Yeah.
So you can understand them better, and don't go for a push and try and just close on that deal straight away. What you're doing, you just move it to the next level. And if you get a positive response, but sometimes people say, well, I'm not sure I'd be doing that. I want this. And many people have unrealistic expectations. Just sidetracking a little bit, I remember when I first started, and I started coming across good deals because I started sourcing at the beginning. That's kind of where I started the journey. I went and approached all the people that I knew that had money, ex-business associates, clients, friends, whatever it might be. And very quickly I realized, well, some of them have got money because they never spend it. So it was really, it's a case of understanding what somebody wants. And when you work out what they're looking for, it's a case of how can you make that happen?
Yeah, no, that's perfect.
You have to reverse engineer it essentially, rather than giving a template and say, hey, I'll do this, this, and this. You have to see how is it that I can fit the needs of the other person.
Yeah,
and is it going to be a fit?
And I think you touched on something important there, where you said just get to the crux of it in terms of there's a lot of fluff, like what can you bring to the party, what can they bring to the party, and can you find a middle ground? And as you said, something which is very important when you're just starting out, it actually pays to align yourself with the right people. So if you're learning about JVs or raising finance, it might be yourself. Serviced accommodation might be someone else. Even if it gets to the stage where you're working for free, or you're just trying to pick up some knowledge, or even just watch your social medias, getting yourself out there and showing what you're capable of doing. Just to build that awareness that you're in the property industry and this is what you're looking for. Just to delve even more deeper, we're getting deep in this podcast. Can you talk me through a little bit about your process on how this works in terms of, let's just say I'm a newbie. Let's just say I'm able to raise finance and I'm able to find deals. What order would you do each? So would you find the deal and then raise the money? Would you raise the money first and say, right, okay, I've got a pot of cash now. Now it's time to look for the money, or would you try and do a bit of both? That's
a great question, and a very important one too. And another one I learned the hard way, where what I would do, especially when I started sourcing at the beginning, I started finding some really good deals, and I was struggling to sell them because also the market was still a little bit uncertain at the time. That's why there were so many great deals around. I was just tripping up all over the place. And I was trying to sell these deals on, but I was struggling to find people who would either invest in them or buy them off me. What I found was that actually when you're focused on one thing, you can get a better result in that. So I'd say, okay, so I'm focused on finding deals. That's great. But actually now I can't get any further because I haven't got the money to put in the deals. So then what I'll do is I'll take my foot off the gas and sourcing, and then I'll go and spend a month or so talking to lots of people, following up on people I've had a conversation with, going through my business cards. Someone mentioned they might be interested if you get this, this, and this. And then I'd go and talk to them. And then I'd line up some money. And then actually, because I left it so long with those deals are gone, falling out of bed. Yeah. The reality is you've got to spin both plates. You can't do one on its own. Yeah. You really have to have both things going simultaneously. If you're sourcing and moving deals on, or you're sourcing and you want investment in, you have to line both of them up. They both have to get across the finish line simultaneously.
Yeah, a lot of people think it's a kind of like a chicken and egg, what comes first. But actually, truth be told, is you need them both, yes. As you mentioned. And to I think to try and balance both in itself is probably a difficult task, where you spend 1 month sourcing and realize, okay, I've got no investors. Now it's time to actually slow down a little bit on the sourcing and actually get some investors lined up. Can you talk us, obviously, after your sort of deal in Stoke, which went particularly well, did you have any deals which didn't go so well, or that you potentially might have lost money on if you didn't act in a certain way, or did you lose money on any deals? Was there anything that was sort of...
Yeah, in the early days, I did lose a little bit of money, not a huge amount, and I'm thankful for it actually, because it taught me a huge amount. Yeah. And now I'm obsessively careful with other people's money. And just to be clear, on the occasions I did lose money and it was other people's money, I actually paid to ensure that they weren't going to be out of pocket. Okay. And in one case, that person came back and invested with me time and time again, because there was no arrangement of, look, this is a joint venture, if this has gone wrong, and often it was because things would just cost way more. then, we thought, well, there were unforeseens that would happen. How do we deal with those situations? And I'd made sure each time that actually that person doesn't lose out. I thought, because for me, it was a case that they've entrusted me on this deal, even though it's beyond my control, it just doesn't feel right that they should lose money. And because it was me that they've invested in, not the deal.
Yeah.
And as I said, a few times it happened, about 3 times, something like that in the early days, can't remember exactly. And I'd covered that shortfall for them. And so that all occasions, they were just amazed that I did that. First, one, for them, that was it. That was, they just demonstrated, this is my ethics, these are my values, and they just invested with me time to go, and made so much money for them over the years. And one of the earlier deals I did, actually not far from here in Dudley, when I converted some flats, that was a joint venture I did. It was a house converted into 3 flats. We'd done all the figures and stuff, and it was the first time I was doing a flat conversion. And the partner had funded the whole deal. I was going to do all the work, and then we were going to share the profit, typical kind of 50-50 type arrangement, if you like. And I remember as we got started in it, I discovered that we need to do sound insulation between the flats, which I'd never come across before. I didn't know about. And, at the end of the day, we don't know what we don't know. And I certainly didn't know about that. Yeah. And to my detriment, I discovered it's going to cost a small fortune. It was something like about 15 grand or something between the flats. And that was quite a bit of money considering what the budget was. I can't remember how much it was. It was quite a long time ago this was. And then I had to go tail between my leg back to the investor and say, we've kind of cocked up a little bit. We've kind of found that we actually put quite a bit more money in to do this. And we weren't aware that we need to do this sound insulation here. And fortunately, he had the funds, he could do it. But, I was in a very, very weak negotiating position and pretty much gave up most of my position to make sure that he was okay on it. I still delivered on that, and in fact, we still have those flats at the moment. But what it taught me was that you need to think of these things well in advance. So, in situations like that, the most important thing is communication. If things look like they're not working, which it happens, in property, do things cost more and take longer? Yeah. Yes, nearly always. And because we fail to really get to the grasp of things, if we start stripping this property down, we can take a guess of what we're going to find, but you can't for sure know until you strip certain things down, whether there's wet rot underneath, there's a massive drainage problem, and these things you just don't know. And that's the problem with property, especially renovating old properties, that it can be a bit of a money pit sometimes, but so you need to build that in. And if that happens, you need to have discussed up front, what if there's some unforeseens? How are we going to deal with those? Yeah. Who's going to pay for that? Where's that money going to come from? Because I've also had to roll up my sleeve and help out many times investors when they've fallen out on those situations. Well, I said I was going to put this amount of money in, and they're now spending more than that. I'm not putting that money in. They need to find it. And the other party saying, well, we're only putting time in because we don't have any money. And they're a bit of a stalemate because there's a breakdown in communication. So I think communication is the key thing. If anything looks like it might be going off track, that you're talking to the other party and saying, look, we need to find a result that works for everybody here.
I think that's, how you mentioned communication, that's massively important. And part of that, especially in that deal there, was just honesty.
Yes.
Although you had a weak negotiating position, it was something that you couldn't account for, but you just relayed that information onto your investor. Yes, it must have been an incredibly difficult conversation. I can't even imagine. As an investor, that's the last thing you want to hear. But as you mentioned, you still negotiated it in a way where, okay, you gave up a little bit more of what you did, but your reputation was still intact and that deal was still intact, which is massively important. Whilst we're on the sort of topic of raising finance, what sort of ways do you raise it? So obviously investors is one. Is there any other forms of finance that you use to raise?
So when it comes to other people's money, is kind of the banner I put it under. I tend to use 2 techniques personally. One is a straightforward loan, and the other one is a joint venture, a pure sharing of risk and reward. For many reasons, some I can't talk about now, is for loans, I tend to have a minimum of £50,000 if someone's investing with me in a deal. So it's a fixed amount of money for a fixed period of time for a fixed return. The FCA don't beat you up over that stuff. It's very straightforward. Their take on it is most of the population understand what a loan is. And so there's nothing complex about that. There's no kind of complex investment instrument here, as it were. But with joint ventures, it's a completely different thing. Joint ventures is you're sharing risk and reward, and people don't always understand risks that are involved in a transaction. So these days, when I'm doing joint ventures, it tend to be £350,000 and above for a couple of reasons. One is because primarily I want to only have high net worth individuals. So from an FCA point of view as well, it means I'm dealing with high net worth. And secondly, it's not their life savings that's in that project. If they have a significant amount of money, they're putting a certain amount of money, it's still a significant amount of money, but in proportion to their wealth, it's much smaller. And it also, they tend to understand risk a little bit better. Now, my job is to mitigate the risk as much as I possibly can, but there is always risk. And I've never been in a situation where we've lost significant amounts of money, and hopefully I'll never be in that situation. But could it happen? Yeah, I mean, nobody expected Corona to happen this year. Anything can happen. Do you know what I mean? God forbid I could be hit by a bus walking home and I could be incapacitated, not dead, but unable to function. What happens in that situation? So it's thinking through, how do you deal with that? Fortunately, I have some measures in place that, it wouldn't be the same, but things would continue and be able to complete. But you just have to think that actually there are risks involved. How do you deal with those risks? So fully understanding risk, I think, is important. I think a lot of people are just wash over the risks. I grew up in the 80s, and good old Del Boy on TV was one of my favourite shows, and said, this time next year, Rodney, we're going to be millionaires. It's like every week it was the same, this time next year, because it was always about the upside. It was not about what if this goes wrong, what if that goes wrong. It was always about the upside. And when we focus on the upside, we become blind to the downside. We really have to understand downside. And as I said earlier on, I'm obsessive when it comes to other people's money, because I want to be able to sleep at night knowing that this is going to work, they're going to make money, they're going to get their money back.
Yeah, it's probably a good feeling as well when a project is complete and you're able to sort of go follow through on your word. You make a bit of money, they make a bit of money, both parties happy, and they'll probably rush to invest with you again. Yeah, it happens.
I mean, sometimes people invest again and again, other time people invest once and they want to move on to other things. Sometimes people invest because they want to learn how something happens so they can go and do it for themselves as well. And this is part of when you're doing your due diligence on your investor. What is it that they ultimately want? Why is it? Don't make the assumption everybody's investing just because they want to make money.
Yeah.
Do you say, we all want to make money, but that may not be the primary reason. It might be because there's something about you that you're doing that they're comfortable with, they're keen to learn from you. And if they're open about that and you take the time to understand that, you can make sure that you deliver on that.
So in terms of investors, how do you qualify your investors? And have you got a situation now where you get the investors to actually chase you up rather than the other way around?
Yeah, I think that it's an important technique that you can follow. So what I tend to do in terms of qualification, well, one qualification is to have a certain level of investment. So earlier I talked about 50,000, 350. So that's a form of qualification. But another form of qualification is to know how serious and how genuine somebody is. So you could be talking to somebody about investing in a deal with you, but actually, what's their position? Why are they looking to invest? So I think it's really about turning it around and asking them questions. So tell me, what is it that got you thinking about investing in property? And what is it about me that appealed to you for us to have a conversation? You're slowly turning it around. They've got to sell the idea to you rather than you sell the idea to them. That's really important, because that way you can start asking questions around. So tell me, in terms of the funds, how much have you got allocated for your property investing journey? That's a very different question to how much money have you got.
Yeah.
Because how much someone's allocated may not be the same as how much somebody's got. So when you're asking these questions and you want to talk about, obviously for anti-money laundering purposes, you want to know where the money's come from. If they've got some favorite uncle in some country that's blacklisted in terms of where money's supposed to come from, you have to be a little bit careful. So you want to ask some questions about how they've acquired the funds. Say, look, obviously for anti-money laundering purposes and FCA purposes, I need to understand a little bit more about you to see if it might be a good fit for us to talk some more about the deal. So this is before you really get into the mechanics of the deal. This is just on a fairly... Now, you wouldn't do this on the first time you meet them, a networking event, but when it looks like there might be an opportunity to explore further, these are one things you want to have. So for example, at the first coffee meeting type of situation, you want to ask these questions and you want to see how liquid they are. And again, I've done this from experience when I've stumbled on this. I'm working with somebody thinking they've said they've got some amount of money. And when it comes to the crux, I realize they can access that after they remortgage a property, which they haven't even yet started. And I'm thinking, the deal's about to cross the line. We need the funds. Yeah. Oh, I didn't realize you needed that quick. I need to get onto my mortgage broker. I'm thinking, how long is that going to take? So it's about just seeing how liquid they are, what they're looking to invest. And of course, one mistake people I think make is they offer a return. They say, oh, I'm offering like 6% or 8% or whatever it might be. Well, actually, you should ask, so with the funds that you've mentioned that you've allocated for your property investing journey, what return are you looking to try and achieve on those?
Smart.
And why that return? And what investing have you already done? And what return were you getting on that? Now, sometimes people will give you something that's unrealistic. You get this all the time. And they might say, oh, I want 25% return on my money, and it needs to be on a first charge. And I say, yeah, absolutely. And what risk is it you're prepared to take to get that? See, now what you're doing, you're contrasting the unrealistic return and associating it with high risk. You say, well, because we know in property you can achieve huge returns, but you're not necessarily going to be offering someone 25%. It's not realistic, it's not sensible, it's not sustainable as well. So what you're doing, you're tying risk with higher return. So I say to people, look, with me, you are not going to get massive returns. You'll get healthy, modest returns, but your money's going to be safe.
Yeah, I like that. It kind of sort of ties in. Have you ever had to turn investors down because of situations that they haven't been sort of clear about from the start? So you spoke a little bit about how liquid people are. Yeah, they might be sort of asset rich, but they don't actually have access to that cash until they jump through a ton of sort of hurdles. Have you had to turn investors down for that reason? Or
yes, I think recently, kind of many times I'm having the conversation, I'm thinking it's not going to be right. And we were just speaking in the break now about a situation I had somebody this morning, and I said, look, it's not going to be, I'm not going to be right for you is usually my get out. So what, there'll be many situations where you should turn money down. The problem is when you start, it's really hard to turn money down because you think, I need the money, but you've got to stop needing the money but need to find the right person. Yeah. Because, on times where I've invested with people that didn't have the right feeling and it was just because they had the money, we could do the deal. Those are the ones that have come back and bit me on the arse, and they've been painful and heartache and stuff. And, it's been a painful relationship because they're in terms of what they want. So, for example, they start interfering with the project, how they want things done, or controlling money, how the money is being released to you, drip fed. The control of bank accounts, those kind of things I've kind of dealt with through experience now. I don't allow any of those things to happen. I'm in control of the project. You're an investor. You're my funding partner is the term I use. So, which is no different to the bank. Yeah. You're getting a way better return than what the bank would get. Yeah. So just touching back on what we were talking about earlier on with returns and security, because security is also another big question that comes up when we're using other people's money. I think when someone says, so what's my security? Your answer to that should be, what would you like it to be? Because we have different interpretations to what the word security means. Even what first charge means or second charge restrictions, we all have different interpretations. So again, you need to understand what that means for the other person and how you might be able to deliver it. So in the example I gave earlier on, someone wanted 25% return on its first charge, and say, sure, I understand what you're saying. So right now I could probably go to any high street bank and borrow money at 3% on a first charge. So how does it make commercial sense for me borrowing from you at 25%? You see, so there could be some element of risk. So for example, it might be, well, the bank only lends 75%. In this case, they're going to lend 150% because they're going to lend all the money to purchase it and they're going to lend the money to develop it. Do you see? So now you're tying it with risk and you can look at return. So you shouldn't just give in straight away when someone talks about a return figure and just accept that. And also, what we need to do is to be able to build up a hunger for people wanting to work with us. You need to have a choice. You really don't want to be in a position where you don't have a choice. You've got a great deal and you've got one miserable git you've spoken to and he's your only investor. You want to be able to have a choice. And the way that happens is when you're, say, networking, speaking to people, whether you're doing this online or connecting with people, you're understanding people, you're asking them what they're looking for, what their expectations are, because that way, when you've got something right, you can talk to them. And what I tend to do is say, test close them. What I mean by that is, Let's say you've had a conversation with somebody at a networking event, you followed up for a coffee, you've got to know each other a little bit better, you're interested in discussing things. At the end of that coffee, the conversation should finish something along the lines of, so thank you so much for your time today, but just so I understand, what we're saying is if I can find an opportunity that requires at least £100,000 investment from you that will deliver this return over this period of time, that's something we should explore further. Is that right? You end the conversation there. You've made it very clear what the next steps are. So then you should only go back to them when you've got that type of deal.
Yeah.
Mistake often happens is when we go back to our investors that we've spoken to and we say, oh, I've got this amazing deal. And it doesn't fit into the criteria effectively that they're giving you earlier on. And so what we end up doing, we end up chasing investors that are never going to invest. What you need to do is be able to send that to say, you need to have, say, 3 investors that fit that criteria, that what you're looking for. Because then you can send it to one and say, look, well, actually, even before you send it, what I would do is I'd send them a message or give them a call and say, look, I've got this deal. I think it fits into what we spoke about earlier on. Is it okay if I send it across for you to have a look at?
Yeah.
And you ping it across from them, but you also make it clear that they need to let you know by tomorrow or end of the evening or whatever it might be. So you need to put some kind of timeline on it, because the reality is you get good deals usually in exchange for time. You need to move quickly.
Yeah.
Good deals don't sit around for 6 and 8 months.
Yeah.
It's days and weeks. I've exchanged for stuff, bought property within a week, because the best deals are done pretty much instantly. So, it's a genuine scarcity that you can use there. So when you send the deal across to them, you also make it very easy for them to say no. And when I say that, people think, well, that's strange. Why would you want them to now back out? Because what you do when you send the deal across to them, you say, look, this is a deal. I think it fits in with what we were talking about. I want you to have a look at it. And we can speak again tomorrow, this evening, about any questions. But I need to know whether it works or not by this time frame. And if it doesn't work for you, that's perfectly okay. That's no problem whatsoever. Because then I can then speak to the other investor that I've got to speak about. Not necessarily more serious, but somebody else that may be that suited for it as well. So what that does, it takes the pressure off your investor, because you don't want to put them under pressure. You don't want to do a hard close. And I'll tell you why you don't want to do a hard close. Because how long does it take to complete a property purchase? Typically 2-3 months, right?
True.
Do you think they've got 60, 90 sleepless nights to be able to change their mind?
True.
Absolutely they have. And I've, again, a lot of the stuff I share, I've learnt it the hard way. I've experienced situations where I get a call Friday morning and we're exchanging that afternoon to say, well, I don't even get a call. It's been a text to say, thank you, we've had a change of heart, we're not going ahead. And I'm thinking, what do I do now? I've got 2 hours to exchange contracts.
Yeah.
So by making it easy for somebody to get out at the beginning, they're not going to let you out further down the road.
I think that's brilliant. I think one thing that I picked up on there, which is quite a good tip really, is be clear from the outset of expectations.
Yes.
That way, when you do have a conversation somewhere down the line, the terms have already been laid out. You both have an understanding, and then it makes it easy for conversations to move forward. If you're a bit blasé, or the lines are a bit blurred, or you're giving figures which are between this and between that, it then makes it more difficult to know whether that person is interested or not, and even that investor to be interested, because as you mentioned, when everything is laid out in black and white, that's fantastic. One question that I wanted to ask you actually is, obviously we've got this world sort of pandemic that's happening at the moment. I won't say the name, but the virus. YouTube will take this down otherwise. Has that affected your business, your project, and just your property business as a whole, moving in the last sort of like 3 months or so?
Yeah. So I see my businesses as threefold in property. The first and primary business is that of development. We buy property, we develop it, whether we keep it or we sell it, or it's buying and adding value to property. That's my core business. And that's where predominantly I work with the investors on that. The second business is the letting agencies, where we're managing property and we're making money, some with my own portfolio, some other people's property as well that we manage. And the third one is that of a mentoring training business. So I think about, in my mind, as those as 3 separate businesses. Although I've got lots of different companies for various things, but that's how I tend to compartmentalize it, if you like, in my mind. So when COVID, or when the market changed, I'll let you edit that. When the market started to change a few weeks ago, and all the and the lockdown started, I'm not going to lie to you. I had a day of a panic and thinking, oh my God, how is this going to affect us? How long is this going to go on for? Because it was just so unexpected. When you can see something happening, then you can plan for it. So again, earlier we were talking when we were off mic about what's going to happen to the market. And I'm a firm believer as well that I think the market's going to crash, the property market later this year. I think it's just been propped up artificially right now. But we can see that, so you can plan. So right now I was telling you about some properties I'm selling, and I'm saying to the stage end, yeah, if the market's buoyant, you sell them. You go ahead and sell them because I need to get them shifted. So, you can plan for that. But when something happens unexpected and you can't plan for, then, that can be quite tough. So how did it impact us? Well, in terms of the lettings, the main issue was some tenants not being able to pay straight away. Now, first thing you have to do is filter out who's genuine and who's trying it on. Or the government said, I don't have to pay my rent, so I'm not paying my rent for the next 3 months. Apparently, you guys are going to get some mortgage holiday or something. We have to deal with those kind of calls. But the team are great. We talked about it. They kind of got that back on track. I was speaking to one of the team yesterday, and our arrears level is actually quite low. It's always been quite low because we're quite fussy about generally who we put in the property in the first place. And so I'm pleased that we've kind of got that back on track, but it was a little bit of a panic, and some of the staff we furloughed, some we sent home to work from home, but we're kind of now getting all that back on track. So that's good. In terms of the development business, that's probably what suffered the most, because we had some of the contractors who just stopped working because the government said you shouldn't be going to work if you can work from home, or if you can work from home, you should work from home, you shouldn't go out, or whatever the confusing message was. So some of them just started, actually, we're not working. So we had a couple of projects just stopped. And then we had problems with suppliers by not being able to get materials. And some of the manufacturers closed, like window manufacturers, kitchen manufacturers, they'd all stopped. That means, I'm building new houses, I'm renovating properties. Everything was grinding to a halt. And I was thinking, this is not good. I've got properties lined up to sell. I've got bridges that need to finish at a certain point. I've got investors' money in projects. And ultimately, what it meant is that I've had to take a hit. My profit margins have been squeezed, but people that invested with me, they'll be okay. My job is to protect them, even if I have to take a hit, because you know what? I'll always make more money. You're just not going to be able to make more time. You just do the best you can with what you have. So I'm pleased the development stuff is pretty much back on track now. We'll see how the sales go. If we can sell the ones that are due to be sold, great. If not, I've already worked out we'll be able to hold them and just sit tight for them for a year or so. And then the third business, the mentoring and the support business, obviously we do live events and stuff, as you spoke about earlier on. All that's kind of ground to a halt, which is a bit disappointing because I love the energy and connecting with people and stuff. I really enjoy doing that. All that stopped. I actually haven't moved the stuff online like I know many other people have, because I just felt it was just jumping on the bandwagon for the sake of it. And I thought it's not the same experience, so I've decided not to do that. Hopefully, maybe later in the year we'll get back up and running with the events. So I've just focused on my mentees at the moment, on my mentor program, just focus on supporting them through this, sharing my knowledge, experience of going through a recession previously, how I see the market changing, and just supporting them. So in short, I have taken a whack, but I'm still here. I'm still standing.
Yeah, I love that. I love the fact that even though you know that your profit margins are squeezed, because you know where the market is headed, it's almost like this doesn't matter in the short term anyway, because this time next year, the year after, you'll be back to sort of normal and moving on your projects. A question that I have for you, actually, since your early days of when you did your first project in Stoke, has your property sort of strategy evolved? Because obviously your first one was a refurb project. Have you ever moved into any other areas of business? I know you mentioned lettings. Have there been any other strategies that you've sort of worked on?
Yeah, definitely. So there's been the core strategies and peripheral strategies as well. And if anyone's followed me for a period of time, they'll hear me saying this a lot. And that's the only certainty in property is constant change. The market just evolves. It doesn't stand still, and you have to be ready to adapt. So just because you've got one thing working right now, it doesn't mean that's it. That's how it works forever. If you think of some of the SA operators, we run an SA business as well, and that clearly suffered over the last few months as well. But we're still here. We've managed to kind of save it all. It just means we just made nowhere near as much money as we would have ordinarily. But at the end of the day, it's about survival, and then you continue to grow. So the strategies have evolved massively. As I said right at the beginning, I just learned so much about so many different things. So there's a lot of strategies I've done a couple of times just to experience them. And there's been our core strategies. So, for example, the core ones have been initially sourcing property, because when I started, that's kind of how it got me started to get me a little bit of an income, selling deals on, earning a little bit of a fee. And then I started partnering, doing some single buy-to-lets, then some smaller HMOs because I wanted better cash flow, then onto the bigger, more professional HMOs. So typically now we spend £120,000 converting a house to a professional HMO, whereas before it was like, £2,000, bit of cheap furniture and a fluffy pillow. So it's some of it's evolving of the same strategies, and some of it's transitioning into different ones. So I've also done commercial conversion, where take a commercial building, convert them to residential. I'm building houses now. The development stuff excites me, and flipping I really enjoy. I love flipping because my dream would be two strategies: high income to keep and flipping. So you get a really good income from your rental portfolio, and you're buying and selling stuff, adding value. And because I like to see how you can take something like so for example, we're going to do a quick video shoot this afternoon at one of the projects where I bought it for 150,000. It was a real estate. It's nearly finished, and we're putting it for 400,000. Now we spent a significant amount of money on it as well, but it's still a nice, profitable deal. So, I love that kind of stuff, not just because it kind of makes great money, it's completely different from what it was. We take a house that was built 100 years ago to something that's a beautiful modern home today. So I really enjoy and get excited by that. The problem is, over the last few years, the market just hasn't been right to do many of those deals because everything's overpriced. People are paying too much for them, and the margins are being squeezed. So other stuff that I've done loads of lease options, delayed completions, planning gain, what else? I got the SA business as well. So I don't do all of this on my own, by the way. I have a great team of people, about 18 staff that work with me. I have some partners as well. So some of you probably met Idas, who works with me. So he runs the service accommodation side of the business. So, I have great people around me to make it work. I'm a firm believer about the people around you make the biggest difference.
Did it take you a while to diversify? So for any newbie starting out, would you sort of recommend picking one strategy, going with it, and just putting it sort of like all your efforts into that until you get confident at it, and then diversifying? Or did you start diversifying your sort of property early on? So did you go into like HMOs and SAs quite early, or did you just think, right, refurbs for a while and then I'll sort of slowly sort of trickle feed into other strategies?
I would highly recommend not copying what I did, because the fastest route to an unsuccessful career. And I think focus makes the biggest difference. You need to focus on one or two strategies. That's it. If you could spend 80% of your time on one core strategy and maybe 20% on another one, I think that would be the most I would suggest. I wouldn't suggest anything more than that. The more focused you are, the better results you're going to get. It's really as simple as that. And I talk about, you need to get to some mastery level in one particular area before you even consider doing something else. So, I would say you need to really focus on one strategy, and the way you pick that strategy is depending on where you're located in the country, where we are in the economic cycle, how much money you have access to, how much money you may be able to raise. That's through mortgages, it could be bridging, it could be other people's money, how much time you have available to commit to the strategy, what your skills are you can bring to the business. So for example, someone might be an accountant with an accounting background, someone might be a salesperson with kind of personal sales skills, whatever it might be. All these things need to be put into the mix to consider the right strategy. The mistake I've made, and I see many people still make, they see somebody else doing a strategy, they see the great results, they don't see the years and years of struggle to get there, and they think that's what I want to do. But you have to think, actually, is that going to be the right way for you? So I think once you can reflect on all the things that need to go into the pot, and think which method would be right for you, then that would be it. So for instance, if you're somebody that loves doing the analytics and the numbers and the analysis, the crunching, the research, and I'm saying to you, go and talk to the agent, this is how you're going to negotiate the deal of him, and this is your mind tricks to use with the agent, that skill is way outside the comfort zone of that person. Now, I'm not saying it's not possible for them to learn that, but I'm saying you're going against the grain.
So true.
Focus on the thing you're really good at, and either work with other people who have that skill, or use your skills that are going to be best utilized in a certain type of strategy.
I love that. It's a case of self-reflection and seeing, as you mentioned, before people jump into business. I think these are factors that everyone should consider. I mean, even I'm guilty of just jumping straight into it because I'm eager to sort of start. But as you mentioned, see what skills you're good at, see how these skills can be utilized, see what your weaknesses are, and also what you actually bring to the table in terms of your time, finances, and that's almost that self-assessment. Probably help drive the direction of which way you're going in with your property journey anyway. A quick question from myself, sort of like a personal one. Obviously speaking to you, I've spoken to you a couple of times now. You're incredibly knowledgeable. I watch your YouTube as well. YouTube got links going to be in the description. Fantastic. How do you keep your property knowledge up to date, and how do you keep on top of what's happening with the property market, all these new strategies that come out? How do you keep on top of that? And just a sort of personal question as well, I don't know whether this is true. Do you have anyone that sort of mentors you, that's sort of like sort of above you and where you are? Because I know you do a lot of mentoring to us guys that are coming through. Just wanted a little bit of information on that.
Absolutely. So just to take a step back, earlier we were talking about when I had the biggest shift from when I was stuck trying to do lots of different things, and then I got focused on one. And actually that shift happened when somebody turned up in my life who ended up being a mentor for a few years and created that guidance for me. And really all they did, because I was so close to the forest, I couldn't see the wood from the trees. And when someone's standing by the side of you, they see things in a different perspective. Now, it could be somebody that's got considerably more experience. It could be somebody that's got less experience than you. Because if you think about some coaches, the coaches aren't better than the people they necessarily coach, but they can support them to be better. And that's where I had the biggest shift. And all really they did is help me put the blinkers on and say, stop being distracted by all these other things and just focus on this. You've got deals, you've got people you're talking to who could buy the deals, just focus on that, sell deals and start building it from there. And that's really what created the biggest shift. And that was my first experience of a proper mentor within property. Prior to that, I had some guidance in business. As I said, I've always been self-employed, nearly 30 years now. I've always invested a huge amount of money back into personal development and training and learning and keeping my knowledge up to date. Again, when in the early days when we were just about making a little bit of money, my wife thought I was nuts. She goes, "We're making a little bit of money and now you're spending with all these people again. What, is there ever going to be anything left?" I said, no, darling, you have to understand, because they've got to invest in yourself. And I'm so glad I did, and I still continue to do so. So in short, to answer your question, I have several different mentors in different areas of business. That's in marketing, in sales, in property, different aspects of property as well. And I'm involved in mastermind groups with people that are what I see as my level or higher, where we support each other. So I'm involved with a lot of people that help me get better, because I'm the first to put my hand up and say, hey, look, I don't know everything about everything there is to know about property. If there's something new to be learned, I'm the first one there. And a few years ago, I remember I turned up at an event a friend was running, a training event, and I was in the audience, and somebody else I'd met at the event says, "What are you doing here? You must know this stuff." And I says, "Well, yeah, but actually it doesn't mean you know everything there is. I'm always willing to learn. If there's something to be learned, I'm the first one there. I want to understand how it works." Now, just to be clear, there's a lot of BS out there as well, and I'll decipher that very quickly and I'll rip it apart if I don't see it working. But I'm constantly learning. I'm always trying to do what I can to improve from other people. And I think the best way to learn is by being at the cutting edge with other people that are doing things that are new, that are different. And again, being completely transparent with you, I've invested a lot of money with people who've just been complete charlatans.
No way.
Yeah, so, not all the investments I've been made have been great. So there have been people along the way that I've gone to kind of learn from and learn strategy or techniques from. And they just turned out to be complete crooks, really, and just, peddling nonsense. But, it's been part of the learning. You just need to be careful and double careful whenever you choose to invest, because property training, the reality is it's not cheap. You can spend thousands and thousands of pounds. You want to make sure you're working with somebody who you're compatible with, who you understand, who you have similar values with. So there's no shortage of people you can learn from.
Oh, I love that. Just a quick question from myself, actually. What sort of securities do you provide for your investors? I don't know if deals don't fall through and things like that. I know you sort of briefly touched on it, but are you able to go into a little bit more detail?
Yeah, so tell me, Gov, what sort of security would you like? So it's a great question. I think I'd like to explain it in a slightly different way because I think it's important not everybody understands it. I see security in 4 ways. So when you take out, say, a mortgage from a high street lender, they typically will give you about 75% of the value of the property secured against it as a first charge. So that's your first layer of security. Then you've got the deposit bit, or the gap, the other 25%, and or some people call it the top-up finance, the deposit money, the mezzanine finance, whatever you want to call it. That's the next layer, that 25%. At this point, you've now used up 100% of the equity against that property. Clearly, the second charge who come in on that 25%, or whether it's a second charge restriction, whatever format it might be, are going to be less secure than the first one. The bank's going to be in the safest position with the first charge, or whoever has the first charge. Then you are probably going to have some money that you need to spend on the property, which is going to be the development stage. And that might be another 10, 20, 30, 50,000, whatever it might be, depending on the deal. Now, that's another layer of security and another layer of risk. So let's just use simple numbers. Let's say the property was worth £100,000 and you've got £75,000 from a lender that's taken first charge. Then you've got £25,000 from somebody else who's, say, taken a second charge. You've still got no money in the deal. And now you've got to spend another £25,000 to renovate it. So that's your third level. And then you might have 20 grand of profit at the end. Yeah. That's your final level. Yeah. So it's understanding that these 4 levels, and not everybody sees it in this way. This is just the way I kind of see it. At the end of the day, for me, security means you've got to do everything you can, make sure that they get their money back. And as I mentioned earlier, security means different things to different people. So the more you can understand what somebody means when they say, what will my security be? Then you can try and fit it into one of those. Yeah. So I've done lots of stuff as well that's unsecured, just down on personal guarantee from me. Sometimes people say, "Oh, I'd never do unsecured." But it comes down to what people are comfortable with. Yeah. And what you don't also want to do is bamboozle people with all these different options, because it's too much. You overload them with information, and that leads to indecision.
Yeah, no, that's cleared up so much for me, because I always thought the only way was unsecured. So if you can't pay back an investor or a deal falls through, it's straight out of your pocket. But as you mentioned, there's a ton of different ways around this. Just to wrap this up then, what does the future hold for Mr. Saj? Talk to me. How do you see the end of this year, and then how do you see the next 2, 3, 5 years?
So I think we're certainly in some interesting times, and in a way, although I had a bit of an oh shit moment a few months ago, I'm kind of I'm okay with that now and where the market's going, and I think we're going to face another crash, property crash. That isn't a good thing. It's just, I believe that's what's going to happen. I think right now the market's just been temporarily propped up by feel-good factor of all the money the government's just slushing around, be it furlough, be it grants, be it loans, whatever it might be, all the support that the government provides. And they've done a great job, because let's face it, if they didn't, we'd be in a real bad state right now, where the economy just hit a brick wall, or it's never happened before, just unimaginable. So they've pumped all this money in, so people are feeling comfortable. And the reality is, it is about feeling, because the media is talking about all the things around what's going on with the pandemic, and they're not talking about necessarily the impact. So just yesterday on the news, I think the Bank in England were talking about how severe they think the economy is going to shrink, how severe that's going to be, and it's just unimaginable. But the media isn't focusing on that, so people don't see that. And we're not talking about you and I and property investors when we talk about, don't pay attention to the media because it just fills your mind with rubbish. But the vast majority do, and the media influences thinking and people's minds. So when the media starts talking about house prices are falling, unemployment is rising, that's when there'll be a little bit of a reality check. Well, actually, things aren't rosy. There is a problem. And and I think when the funding starts to dry up, I think unemployment will start to rise. There'll be many people, when they finish their furlough, there will be no job to go back to. And some businesses are just not going to survive this. We've just seen the very, very early bits at the moment. Those are fallen over at the first stage. I think there'll be many more to come. And that will just create a new market. And so people for a long time have said to me, how can I get B&V deals? And I said, well, you can't really. It's not really a B&V market at the moment. It's a strong, buoyant market. B&V is generally more of a distressed market. And I think so now be the time to pivot into more BMV, direct to vendor type transactions. That will be the market, and that's where I'll be focusing more of our energy and our marketing efforts into direct to vendor stuff as well. And I also want to do more developments. That's what I see happening next. And my family involved in the business. I work from home. I worked from home for a long time because I build the business around my lifestyle rather than, I work very hard. I work very long hours, but I work at home around the family. I have an office at home. My elder daughter and my two sons work with me, and my wife works with me as well. My youngest one, she's only 12, but she thinks she runs everything. So they're involved. Whether they choose to take this further or whatever, that's entirely up to them. My job is to show them, look, don't work for money, make money work for you. Understand that you should never be in a position that you have to go and ask somebody for a job. You should be self-sufficient regardless of what you do, that you can survive in life. Now, that's just because of my life experiences. I think, I'm not saying there's anything wrong with having a job. I employ quite a few people. I'm not saying there's anything wrong with having a job. I feel you are more in control of your life and your destiny when you don't have to go to somebody else for a work, and you can fend for yourself. And that's what I try to teach the kids. At the end of the day, I have no idea what they're going to do and where the future will take them. But I want to do so much more. I've got no intention of slowing down or stopping. If I did stop, I'm comfortable. I'd be okay. My family be okay. But I'm just not wired that way. I'll stop when they carry me out in a box.
I think one thing, I think the underlying theme here is every time I talk to you about property, there's this sort of like bubbling, sort of like under the surface passion for it. You love everything about it. Like I said, you've been doing it ever since you got that first deal and those first couple of pounds hit your bank account. Ever since there, you've just pretty much been unstoppable. Yeah, you've had lessons on the way. Yeah, you've made a couple of mistakes here and there, but you've only grown. And you've not just stuck to one strategy and this is all I'll do and this is all I'll ever do. You've ventured into HMOs, service accommodation, lettings, mentoring, events. I can't even imagine the stuff that you still have yet to do in your mind. Do you know what I mean? When you've already achieved so much. And I love the fact as well, like you've got your family involved in this as well. They support you 100%. And I know your little one's always at the events as well. I think she pretty much runs everything behind the scenes, doesn't she? From a personal point of view, I just want to say thank you very much for everything that you do. Everything that you do for our community, everything that you do, from the YouTube videos that you drop to the live feeds that you do for our group, even taking the time out, because I know your structure is regimented and I know straight after this you're shooting off to one of your other projects. So to take a bit of time out to actually answer some of the questions for the new generation of newbies to property that are just up and coming, I've got the utmost respect for you. And like I said, thank you for taking the time out today.
God, thank you so much for the inviting me. I really appreciate it. And I wouldn't be where I am today in life if it wasn't for the many people that helped me along the way. And as I said, there were a few not so helpful, but the vast majority were really helpful. They didn't have to be, and that's always stuck with me. So my values is you give without any expectation of any return. You do the best you can for other people. We're on this earth for a very short period of time.
Yeah.
And we should do the best we can to help and support each other.
No, I love that. In terms of yourself, what is the best way that people can get in touch with you? Is it through sort of like Facebook or LinkedIn or?
Yeah, social media is probably the best way. So generally my preferred platforms are Facebook and LinkedIn. And I've got content on YouTube as well, but easiest way to communicate with me generally is Facebook or LinkedIn. You can find me quite easily at Saj Hussain or the Saj Hussain, depending on which platform it is.
The one and only.
And you'll find me on Instagram and Twitter as well. I try and be social. I do have a busy life, as you say, and I'll try and get back to everybody. But if you've got any questions, anything I can help anybody with, I'm going to start running my weekly live Q&As again, which means you just ping me a question, whatever it is, and I'll do my very best to try and answer it. As I said earlier on, I don't know everything there is to know about property. I have got a huge amount of knowledge of experience, which I'm more than happy to share.
Oh, you're an absolute legend. Thank you for everything. And like I said, thank you for coming down. I'll put the links to every bit of your social media in the description. But just want to say thank you very much for coming down. And guys, until next time, peace out.